Okay, hi everyone. This is going to be the video on the Volunteer Standards of Conduct exam, the intake and interview exam, and then the first few scenarios here with regard to the basic exam. Okay, so let's go in and look at the first one here, the Volunteer Standards of Conduct exam. Right, so you're going to hit launch, start assessment. Right, so the idea with this is there will be a textbook in there, right? This guy you can use, but more importantly, right, this is kind of like a little bit dense there. There's some hints in here, right? So here are some of the hints, right, when you're going through this. Volunteers have to keep client information confidential. You can't be using it, right, if somebody comes in like for your own purposes or to benefit you in some other way. If you're volunteering there, right, you can't cash the refund check of the client or deposit it into your own account, right? They got to open their own bank account. You can't be paid. If the client tries to tip you, say, thank you, I appreciate it, but I can't accept any money, right? The next one here is to volunteer for VITA. You basically only need these 3 exams. In other words, you don't have to. It's not required that you have to pass the advanced exam in order to participate. And then anytime you have self-employment income, that's going to require an advanced certification, right? So you guys are only going to be basic. Here, if there was SE income, it has to be advanced. So let me now kind of go through this, and I'm going to take the exam. I'm obviously not going to show you the answers, but I want to make sure while I do this if there's anything I missed. So I'll be back and the screen's going to change. Okay, so screen should be different, right? I just did the Volunteer Standards of Conduct exam. Basically, all the hints in there, are helpful. A few other things to be aware of, right? If you're committed of like a crime that has like dishonesty or fraud, that person's not allowed to participate, right, in VITA. So removing the software would access to them would be the right idea. Generally, anytime you have somebody come in, a client, you are going to want to look at their photo ID. That's a good thing. And then, right, if somebody prepares it, you review it. Right, the only thing you can work off of is what the preparer told you. In other words, in that case, in that question, the preparer would be liable, the one who didn't properly record the items. Okay, so let's move on to the intake and interview exam. Right, I'm going to launch that. Start assessment. Right, so for this one, you have kind of the intake and interview PDF. Right, there's also the hints in here. All right, so what are some of these hints? Well, hey, you can never self-review the return you prepared, right? So if you prepare return A, somebody else, a third party who's like certified, has to return or review return A. Likewise, anytime you review a return, right, you have to review it at the appropriate level you're certified. In other words, if you're basic certified, then you cannot review an advanced level return. So always be aware of your certification level. Likewise, you always have to use form 13614C. So yeah, this intake form we'll see whenever we do the tax software. Yeah, you got to use that for every client when they come in. They got to fill out that form. Generally, you can take the client's word on things, right? So if they're doing, they give you a list with maybe like a small charitable donation, you can assume that that's good unless there's reason to believe otherwise. And then like anything, right, the person, the taxpayer who's signing the return, that's going to happen at the end of the process. So after you interview them, it's prepared, you sit down with them, you walk over the return, then and only then they sign the return. Okay, so I'm going to go in, complete this. If there's anything else I missed in those hints, I'll give it to you there as kind of some additional hints. But I'll come back, the screen will be flipped. Okay, so back, right, did the intake and interview exam. Nothing too hard there. The hints are pretty helpful. Let's move over to the basic exam, right? So 2022 basic exam. We're going to hit launch. what we're going to do here is, right, so there is a textbook, but I can't get access to it in the sense they've updated it to 2023 on the site. We're doing 2022 returns, but they haven't updated the exam to 2023 yet. So we're in a little bit of a pinch here. Your tax textbook will be helpful, but I think the hints in there are more than enough, as well as this video is going to be helpful for you. All right, so we're going to be doing some hints here for scenario 1, 2, 3, 4, 5, 6, and 6, right? So these guys, right? So there's like 11 multiple choice questions. Then there will be a second video for scenario 7, 8, and 9 on the tax software. But let's start here with Tom Brown, right? So they're giving us some information on this. Give me a second here. Let me pull something up. Okay, so we have Tom. He's 36. He's never been married. Frank, age 13, is his nephew who lived with him for all year. He provided all of his support and over half the cost of keeping up the home. Looks like Tom earned 44 grand. He's blind and cannot be claimed as the dependent by another taxpayer. And then it says Tom and Frank are U.S. citizens, have valid Social Security numbers, and lived in the U.S. for the entire year. Okay, so they want to know what's the most advantageous filing status here. If we go to the hints, right, it says, remember, just because you're not married does not mean you have to file single, right? So the idea with this is if you go through, right, if you have a single parent, in this case, they're going to be head of household, right? So that's the idea with it. Likewise, it says here, Tom can claim a higher standard deduction because he's blind. Well, that's true, right? If you're old or you're blind, so I think it's like over 65, then they do give you an additional standard deduction. It's like, if the flat amount's like $1,400, you get like an additional amount on top of that for each of those items. Now, normally I wouldn't give you like the answers per se like this. So for the tax software, we're going to run through the inputs and then you'll get the answers yourself. But because I can't find that textbook for the basic exam for 2022, we're just going to go through these. It's not that big of a deal. It's 11 questions, right? So that was scenario 1 there. Let's look at scenario 2 for Lewis here and Oneida Monroe. All right, so looks like we're going to have 2 questions here. They are giving us, again, some information. And hold on, let me pause this real quick. All right, so they're giving us some information. We have Lewis and Oneida. They're 26 and 25. They're married. They can't be claimed as a dependent of another. No kids. Looks like they both work and are neither are full-time students. They're low income earners, right? So they're 25, they're 26, they're not in school, they're making 10 grand and 5 grand, pretty much. The idea with this is, right, they're also U.S. citizens, have valid Social Security numbers, they have investment income of $5,000. So first off, they're going to be eligible for the earned income credit. They're within the thresholds for this amount. Likewise, the second question here says their investment income, does that disqualify them, right? Well, again, the idea here, and we don't have the specifics of the 2022 textbook, but the idea, if we look at the hint, is going to be just having investment income by itself does not automatically disqualify you for the earned income tax credit. So this one's going to be false. In other words, if you have too much investment income, right, if they had like 100 grand or 50 grand, right, then no earned income tax credit. But 5 grand here isn't going to be a deal breaker for it. All right, so let's move to scenario 3 here. They're giving us some information, and it looks like, hold on, give me 1 second here. Right, we have Sebastian and Ashley Miller. They're married. They earn 32 in wages and 24. They paid all the costs of keeping up a home for their 2 children, Laura and Timothy. Laura is 14 and Timothy is 17. Looks like they did not have enough deductions to itemize, but they contributed things to their church, a charity. They're all U.S. citizens and have valid Social Security numbers. right? So the first question here is which of the following children qualifies for the child tax credit? So if we look at the hints over here, we're going to see that Timothy fails the age requirement. In other words, it's 0 through 16 for that $2,000 child tax credit. He's 17, so Timothy doesn't get it. Laura does. There we go. Laura is going to qualify. Their daughter qualifies. Next one here is, right, for 6, if we look at the hint, it says, let's see what's going on. It says they're not going to itemize, but they can get a above the line deduction for their charity. No, that's false, right? Charitable deductions are itemized deductions. It used to be for like 1 year during COVID, they would give you like a little bit as an above the line deduction, but that's not the case anymore. So this one here, 6 is going to be false. All right, let's move on to scenario 4. Right, what's going on? Let's look at the hints. So we're looking at Washington. So it says Jenny fails the age requirement for child tax credit, but it's eligible to be claimed for other dependent credit. And then false, they do not qualify. So what's going on here? It says the Washingtons qualify for the credit for other dependents. That's the idea with Jenny here. So in other words, if you have kids, right, or qualifying child, qualifying relative who live with you, if they're qualifying child, generally you can get $2,000 for them for the child tax credit. If they do not meet that standard, and they still live with you, like maybe they're a qualifying relative or they're like an 18-year-old right here who's not in school full time with it, in that case, you're going to get a $500 credit for other dependents. So in this case, the answers are going to be true. Aaron will get the child tax credit, $2,000. Jenny, she's too old for that child tax credit. We're going to get the credit for other dependents. That's true. Next one here, 8. If we look at it, false, they do not qualify. So you can put false there. The idea here is they're going to probably make too much money, or there's going to be some other issue for why they do not qualify for the earned income tax credit. Let's move to scenario 5, right? So let's look at the hints here. We got Isabella Recon. So if we look at it, right? So let's see here, Mary, Washington. Okay, so first one here is they are not going to be eligible to claim the earned income tax credit. Second thing is what's going on. They're giving us some information. This one right here, they're going to have to take the RMD in 2023, right? So they're saying, hey, she turned 72. She worked as a librarian. Looks like she retired in 2019. She contributed pre-tax dollars through her employer. So the idea with this is they want to know, with regard to her retirement amounts here, when does she have to take her first required minimum distribution? This is, again, you'd need the textbook to look at this. This one's just going to be true, okay? All right, so let's look here at Leon, right? So we have 3 more questions. So what's the hints for this one? Unemployment income is going to be taxable. If you have an undergrad degree, right, your first 4 years of undergrad, then you got to take the lifetime learning credit for additional education, assuming it was meant to improve a job. And then student loan interest is an above the line deduction. So the first one Leon must include is unemployment. Yeah, that unemployment compensation, that's going to be taxable. 12, it says, which of the following credit is he eligible for? Well, he paid tuition, right, $2,500, and he's going to community college to improve his jobs. He already, let's see if we have it here, he already has a bachelor's degree, right? So if he's going to get additional education to improve himself, he's going for that lifetime learning credit. All right, next one here. Leon can claim the student loan interest deduction as an above the line deduction. That one is true, right? So we're going to stop there. We'll have a separate video for scenarios 7, 8, and 9 because this involves the tax software.